Hello viewers, how are you? My name is Sheikh Nasir. Today we are going to discuss what is straight line method in accounting. Straight line method is also known fixed installment method. The formula is annual depreciation expense equal to cost of fixed asset minus salvage value divided by useful life. Why we called it straight line method? Because every year the result will be same. Point to be noted at here, the salvage value is also known as scrap value or residual value. All words are same meaning. Now we discuss the example of this method. The example is displayed over screen. First of all, we understand the requirements of this example. Please remember one point. When you solve any question in the paper, first of all, you must read out the requirement of the question. You can easily solve any question and your paper, especially accounting, cost accounting. Our first requirements tell about what is the cost of machine and pass the journal entries. And our second requirement is that compute the annual depreciation expense using straight line method. It means we will solve this question with the help of straight line method, right? Our third requirement is we want compute the depreciation expense and accumulated depreciation for 3 years, means 2001, 2 and 3. And our last requirement is journal entries for depreciation expense for each year. Okay, come to the first line. Ahmed and Co. purchased a machine 1st July 2001, which the list price is 1 lakh rupees. With term and conditions, if you pay this amount, means 1 lakh rupees, within 10 days, we will take a discount 2%. Otherwise, you should pay amount within 30 days. And additional expense is bear on this machine when we import this machine. Sale tax, freight charges, transportation charges, installation charges. Please remember, point to be noted, all these amounts are in rupees currency. This is not a dollar amount currency, right? And I have highlighted in red color, especially date. You should focus on highlighted points. The estimated life of this machine is 10 years and has dual value is 5,000 rupees. The company accounting year end 31st December of each year. Okay, let's solve this problem. First of all, we resolve our first requirement. Compute of cost of the machine. The list price of machine is 1 lakh rupees and we will take the cash discount which is 2%. The answer is 2000 rupees. When we will less 2000 from 1 lakh rupees, the answer will be cash price is 98,000 rupees. And after that we will add the other expenses. All other expenses is given in our example question paper. Sale tax expense, which is 15, which we will take 15% of cash price. The answer will be 14,700. And freight charges, transportation and installation charges. When we will add all these expenses, the result will be 32,700. And when we will add 32,700 and 98,000, cost of the machine price will be 1,30,700 rupees. This cost of the machine will put this amount in our formula and find out straight line method. Now let's record the journal entries of Ahmed and Company. First of all, machine account is debit and cash account will be credit. Our second entry, all expenses are debit and cash account will be carried at 32,700, right? And write out the narration to record the initial expenses of machine. We know very well all these expenses are called capital expenditure expenses. We will move these expenses in machine account. How? Machine account is debit 32,700 rupees and all expenses will be carried, sales expense, freight charges, transportation charges, installation charges will be carried. And write down the narration. Okay, let's solve the second requirement, which is computation of annual depreciation. First of all, write down the formula, which is annual depreciation expense equal to cost minus salvage value divided by estimated life in years. Put all values in the formula. When we calculate this formula, the result will be 12,570 per year. It means straight line depreciation per year is 12,570 rupees. Okay, let's solve the our last requirement, which is computation of depreciation expense and accumulated depreciation. What is accumulated depreciation? If we add over previous year depreciation expense amount is called accumulated depreciation. For example, if we add both this depreciation expense 6,822.85 rupees and 12,570 rupees, the result will be 18,855. This is called accumulated depreciation. If we add 12,570 rupees in 18,855, the result will be 31,425 rupees. This is called accumulated depreciation, right? Is it clear? Point to be noted, we have purchased our machine in July 2001. July 2001. That's why we will calculate in 2001 depreciation for only 6 months, right? In 2002 and 2003, the depreciation expense is same because straight line methods tells that the answer of depreciation expense is same all years. Okay, let's solve the journal entries of depreciation expense of each year. In 2001, December 2001, depreciation expense debit and allowance for depreciation expense credit. This entry is fixed for all years, but amount will be variable. Means in total 2001, the amount will be 6,285 and in 2002, the amount will be 12,570 rupees and December 2003, depreciation expense debit and allowance for depreciation credit. The duration will be the core depreciation expense for 2003. I hope you understand the topic. What is straight line method and how we calculate the straight line method. Please like this video and subscribe our channel and share this video in social media and WhatsApp group. Okay, guys, take care.